So in today's show, we're going to be discussing why now is one of the most important times to be focused within the market and to be paying attention and establishing your longer term positions. We're going to have a look at where altcoins are going to go. We're going to have a look at the AI agents, which is a hot and happening narrative where we're seeing, big spikes within the AI sector. Look at Virtual up over there. This is an AI metaverse play up 45% just on the day. We have so much to discuss in today's show. Smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. We're one of the fastest growing channels in the world with already more than 1 million subscribers. So let's get straight into the show content. I want to discuss why now is one of the most important times to be exposed within the market. And it's got a lot to do with this particular chart over here. So again, guys, smash the like button. Let's get straight into it. This is focused on the halving cycles theory, right? Where we typically see price move through various different seasons, just like you have summer, winter, autumn, and spring. You have the same kind of things occurring within the crypto sector, where of course we look at crypto summer as the most explosive phase within the crypto cycle, and that's marked by the red vertical phases running through the screen over here. And you can see specifically focusing on yesterday's date and why the 28th of November was such a very important time frame, right? It's the start of the red phase, the transition from spring into summer, spring being where things reliven and get uplifted once again, and then summer is where things go full force, right? That's where we're in season and we expect to see the markets absolutely explode. So let's just quickly change the viewpoint so you can see everything over here. And what we can have a look at the prior times on the 28th is the dots between the purple and the blue. If you look at the first cycle, which was all the way back in 2012, well, this is what tended to happen next, right? Once you print that purple dot and you go into the 28th, that's the exact point where you transition from spring into summer, and you typically go parabolic. We saw the same thing occur in November the 28th, 2018. Again, that transition point from spring into summer, and things go absolutely parabolic. We saw it again in 2020 on the 28th of November, and now we've just seen the same thing happen once again. So the question is, will history repeat? When you line up these sine waves below over here, well, it suggests that this is where we should start to get major parabolic advancements within the price. And as we transition from, of course, summer into autumn, and that will eventually lead us into winter, that's usually where you want to be exiting. What's so interesting about this particular chart is it lines up exactly with all the timing aspects that we've been looking at, which is related to this chart over here, the monthly time frame for Bitcoin, where we said that our prediction is that somewhere between August and November 2025 is where we should find the end of the crypto cycle, which leaves us with approximately 12 months from now. And so far, it's all following exactly according to plan. You can see the RSI in the monthly is also trending onwards and upwards. And we know that the most parabolic advanced phase of the cycle tends to occur right around this point where you cross above that all-important 80 mark. And where is that RSI right now? Well, you can see it's trending all the way at 75. And probably at some time during next year, we should see this crossing over the 80 mark. And that's where your real fun begins, right in that phase over there in the pocket. And we're looking for a potential rejection from this trend line like we've seen, causing the top of every single one of the prior cycles. And it should line up perfectly in relation to this chart with those seasonal changes, right? Going from spring into summer, we play out the summer for the next 12 months or so, and then we lead into the autumn phase, which inevitably will take us into crypto winter once again, which is the bear market bottom, right? And this is where the opportunity lies, is in riding out those positions that we set last winter already when the market was bottoming around those FTX lows, right? We've already been in this bull market for quite some time. If you're new and you're joining, don't worry, there is still plenty of opportunity. I'm going to show you some of the opportunity in today's show. So again, stay tuned until the very, very end, right? We can have a look over here at Bitcoin, still holding above that 21 weekly exponential moving average. And the question you may be asking is, are things not too overheated, right? Should we not be due for a major pullback like so many people are calling? Well, one thing that I can tell you for certain is that throughout this bull cycle, we've seen it every single step of the way, and we've called it to absolute perfection. every dip that occurs, people are looking for lower and lower prices to gain their entries, and it never gets there, right? As they target lower and lower, the price tends to front run that, and then you immediately see price reacting out of that zone aggressively towards the upside. So now you have a lot of people which are going to be calling for pullbacks into the prior all-time highs, around this $68,000 to $70,000 level. I'm going to show you in today's show as well why that's unlikely. But first, let's answer the question, is the market overheated? Are we due for a major pullback? Well, if we look at the short-term bubble risk, which would suggest, of course, how heated is the market in this current point in time. Now, this takes into account a whole various different amounts of metrics. Essentially, all you need to focus on is the color coding, right? Well, we recently transitioned from the yellow over there into the orange, but you can see we've now recently just come back into the yellow zone. I'll quickly turn it on and off the screen over here. So let's have a look. We'll put on the 1.5. That was where we went. We went into the 1.5 to 1.75. Now we're back in that zone over there, which is going to be the 1.25 to 1.5. Now, theoretically, this is business as usual is the way that you should think about this chart over here. When you look at all the various different colors, right, you're trying to establish those positions all the way down in the 0.5 to about the 1 period, which is going to be those blues popping on and off the screen. That's around those FTX lows. And then you're looking to just simply hold on to your positions, business as usual, as you transition from 1.25 into the 1.5 to 1.75. And then the point in time where you're actually looking to exit your positions, of course, is when you're putting in these 1.75 to above 2, right? That shows extreme risk within the market, and that's where you tend to put in your major cycle top. So business as usual it is, right? Back into the yellow zone, this is where you tend to see that price appreciation and the transition, of course, from spring into full-on summer, where you get that massive price appreciation and parabolic advancement. Now, some of you that are new here might think, what the hell is this guy talking about? He sounds like a perma bull. Well, please ask the people in the comments who have been around since the beginning. You guys know it. We pretty much shorted the last market cycle top. We went long at the exact cycle bottom, and I'm definitely not a perma bull. You'll see me flip incredibly bearish when we do near the top, but right now is not that time. Right now is the time for opportunity within the market, and we can look at the statistical data, and I think hardly anyone does it any better than, of course, friend of the channel, 𝗕𝗓𝗏, who looks at these statistics and the quant data to determine, how often do you come back to the prior all-time highs when you have a macro breakout? And the answer is never. Never, ever, ever. You don't come back to those highs, which means those of you who are looking for price to pull back down into the $68,000 territory, which was the major SR flip that we looked at for a very, very long period of time. What is the SR flip? Remember, prior resistance now flipping into support creates a springboard to catapult price a whole lot higher very, very quickly. And that's exactly what we saw, right? So what are the probabilities that we're going to come back down to those levels? Very, very, very unlikely, right? We never really see that. Once you break that all-time high and it's a real breakout, you tend to continue. So if we do come back down to those levels, well, that's going to be pretty scary, right? That means that maybe it was a left translated cycle. Maybe it was a majorly diminishing return type of cycle where we didn't get anywhere near as high as we would expect and the bull runs over. And I would say the probability of that happening is incredibly low, which means that the probability of this having been a real breakout where prices are going to go much higher is incredibly high. And that is where the trend is, right? The trend is your friend until the end. And right now it's very, very strong. It's still high highs and high lows. Remember, the last high low that we had was all the way down here. So theoretically speaking, and when I say all the way down here, I'm talking about this $67,800 level. That was your last major high low within the market, which means if you do even get a major pullback and you come down into this level over here around the 77.5, that theoretically would be your next high low. So high low 1, there you go. High low 1 came in over here. High low 2 would then be coming in around this region over here. And this is your higher high, which at the end of the day still makes this an uptrend, right? And you don't want to fade that uptrend, right? The trend is your friend until the end. This is how you trade bull markets. This is how you trade trending markets, is you just want to simply focus on the trend. Now, it's not to say that there isn't any risk within the market. Right now, we still are on that TD sequential 9 top, which we spoke about weeks in advance, which suggests exhaustion or at least a pause that should occur within the market. And that pause could be either sideways consolidation for anywhere between 1 and 4 weeks, or it could be an actual pullback for 1 to 4 weeks. At the end of the day, the TD sequential on the weekly time frame that we looked at suggested that we should at the very least get a pause for this week alone, which made this week a high risk week to be opening up new positions. But we're almost at the end of this week, and if we can just survive out this week, the chances will increase that we'll start to break back above that $100,000 territory. But the other thing that I'm looking at, which still is a little bit worrisome in the sense that you may just get a deeper pullback over here to set in the next major high low, is going to be none other than the bear moon, right? So you get these periods within the market cycles of bull moons and bear moons, and I'm by no means any form of an astrologist. I don't believe in star signs or any of those kind of things, but I have seen how this works, right? And simply put, when you have the bull moon, price goes up. When you have the bear moon, price pulls back, bull moon up, down, and so forth, right? We see this repeat, and the reason is simple. The moons control the tides, and your body is mostly made up of water, and it's literally as simple as that. It controls your emotional cycles, and we know that the markets or financial markets are heavily emotional, right? So if we do pull back, these are the worst case scenarios, right? And I'm not even suggesting that you will get that in the next 2 weeks, but if you do pull back, your worst case scenario is going to be a pullback down into about the $77,000 region. That's your sweet spot between the 0.5 fib level and your 0.382. I'm more inclined to believe that is not going to happen yet because these fib levels only work when you have a fully confirmed local top, and we can't necessarily say that is a fully confirmed local top yet, which means that you could expect price to break out, right? You could see continuation from this point in time. So keep an eye out on that. If you look in the Discord, which is the Whale Room private Discord that we have, you can see yesterday, this was the analysis that we were looking at on the hourly, a small pullback into the 50 and 200 EMA, and then an immediate reclaim and bounce, and then an attempt at the $96,777 level. And we literally got exactly that, right? So there it is, pulls back, comes up, bounces, rejects from that key 96.77. So in the very short term, this is truly the level to reclaim. You want to see price immediately get back above the 96.77. If you can get above that level, call it 97,000 for the sake of round numbers. If you can get above 97,000, well, then you increase the probability that you're going to follow this trajectory, which is a break above $100,000, and then maybe one more throwback into that 100K level, holding a support, and then price continuing on higher, right? So another part of the reason why we're looking at that, of course, is this, right? You can see, if you look at the Binance liquidation heat map, Binance is the biggest retail trading exchange in the world. This is why we use the Binance order books to look at where the majority of stop losses are placed. Well, you can see the short traders have their stop losses placed right at that key $100,000 mark, which again means if you can get back above 97, you drastically increase the probability that you're just going to continue from that point onwards, which is about another 3% up, and you're going to hit those stop losses, right? You're going to take those stops. And remember, when you take their stop losses, it's by definition taking the other side of the trade. So if they were short and it hits their stop loss, it immediately means they're closing their short position and market buying back into the market, which tends to push prices a little bit higher, right? There is a major drop-off in volume. We also spoke about this leading into Thanksgiving and the festive season. You can see the 24-hour trading volume has dipped. I mean, this is more than a dip. This is 28% down in terms of that volume. What that simply means is it can create an easily manipulated market, right? So you must be aware when it comes to manipulation. Now, how does manipulation work? When it is a manipulated market, typically they tend to target the periods of highest liquidity, which right now you can see that is on the weekly time frame. Your highest liquidity is actually towards the upside, which is why I would pay attention to this. For more detailed analysis, remember, jump into Whale Room. This is the private Discord. There's currently a Black Friday special where you can sign up if you want to join the world's wealthiest traders. You have exactly 1 day left to join, right? There it is below. You have 1 day left to join. Prices will never, ever, ever, ever be cheaper than this ever again. Use the link in the description of the YouTube channel if you do want to join. And while you're there as well, go through to the comment section. I would actually love to see your guys' perspective of where you think price will be by the 1st of January. Are we going to be below $80,000? Are we going to be between 80 and 90,000? Are we going to be between 90 and 100,000? Or do you think we will be above $100,000 come the 1st of January 2025? Go to the comment section, vote over there, and let's see what you guys think, right? So right now, yes, low volume in terms of the day-to-day volume. You can see that drop off over there. But in terms of the 7-day moving average, this continues to move up, right? This is your daily exchange volume, how much money is being deposited onto those exchanges and how much money is changing hands on that exchange, right? Generally speaking, we want to see this continue to trend towards the upside in these bullish markets. And if we go through the all-time data, well, this is what led to the big parabolic advancement that we had in 2021. And you can see how 2021's 7-day exchange volume completely eclipsed what we saw in 2017, which went down as one of the biggest bull runs that we've ever seen. Now, we would expect that this should eclipse 2021's. So personally speaking, I'm not going to be shaken out of any long positions until such time as I know that we're trading well above 2021's levels, which would signify signs of extreme frothiness. Now, that all lines up with everything we've looked at, right? Timing cycles, sine waves, the monthly RSI, and a whole bunch of other data. It suggests that there's still a lot of time left to go within this particular cycle. And now is probably not the time to be shaken out, right? Especially when you look at something like this, which is a USDT dominance chart, which constantly keeps consolidating at those lows, right? This is currently a downtrend, right? You can see lower lows and lower highs on the daily time frame. And understand this, if the USDT dominance is going down, it means that Tether, the USDT standing for Tether, is flowing into the crypto markets. And if this goes down, crypto markets go up, right? If this goes up, crypto markets go down. So in other words, if you want the market to go up, you want to see this continue to fall. This being a bearish chart is very healthy for the rest of the crypto market. We did label our major resistance. Now, there will be a lot of volatility and chop within this environment, so give it a bit of time. But if we can start to make our way down towards this 3 zone over here, that will easily be enough to get Bitcoin back above $100,000. When you get above $100,000, you clear that major psychological barrier. It's a big round number. It's 6 figures, a six-figure Bitcoin, and that's going to bring headlines, right? News articles, headlines, and that can bring the next wave of retail, right? We have the early retail, those that are heavily in profit, and then we have the late retail, some of you that may have only just recently joined into the crypto markets. Now, you're not too late. You just need to understand that we're already 3 years into this bull run, and you shouldn't expect another 3 years. You should expect anywhere between 6 and 12 more months. But there's plenty of opportunity where you can make a lot of money in that next 6 to 12 months, especially when you study the data over here and you look specifically at Ethereum's returns leading into Q1 of next year, and specifically focusing on the prior years that were bull markets, right, for Ethereum. So what were the bull market years for Ethereum? Let's look at January, February, and March. Well, if you look at January, February, and March for Ethereum, it was 31.92% up. February was 48% up, and March was 214% up, right? This is the major rallies that you'd be looking for. And if you get this, if you clear the $100,000 mark on Bitcoin, Bitcoin tends to stall out, lose a bit of momentum. That money flows into Ethereum and then the rest of the altcoin sector. And this is what brings that final wave of retail, right? The extreme hype. People who have been sidelined cannot stand that they're missing out anymore, and they tend to jump in, unfortunately for them, right at the end, right? If we look at 2020, we also saw the same thing, right? 39% up, or let's go to 2021, 2025 would be the equivalent of what we saw in 2017 and 2021, because remember, you +4, right? So 2021 is the equivalent of what's coming in 2025. So in 2021, we saw 78%, 8%, and then 35%. Point being, big gains, right? Big gains for Ethereum in January, February, and March of the post-halving year, at least following the election phase, where the new administration comes into office, right? It all lines up. It was 2017, 2021, and it's going to be 2025. So we have a lot to look at over there. It's all looking good. And this is an even better chart to be looking at, because this shows us what's happening with the market cap of the Bitcoin dominance. And if Bitcoin dominance tops out, and you can see the RSI and price over here, or at least the chart with the divergence taking place, you can see the rejection of the RSI coming into the top level over here. And this is very high time frame stuff. Looking at the monthly scale, if we can see that rejection take place and the breakdown of the Bitcoin dominance, this is going to be phenomenally good for the altcoin sector, especially when you combine that with the breakdown of the USDT dominance, right? So breakdown of Bitcoin dominance, breakdown of the USDT dominance, it means you have a double whammy in a good way, where you have money flowing out of Bitcoin, money flowing out of Tether, because those dominances are going down, and they're flowing into the altcoin sector, which is why we're studying what's happening with the others dominance, right? Others dominance refers to the lower cap altcoins. And if that goes up, that's where we make massive, massive money. So again, I've shown this chart multiple times, but I just want to simply remind those of you who are new and have not yet seen it, you typically have Bitcoin holding the majority of the dominance for 3 years, and then you have a massive drop, right? And then you have 3 years up, and then you have a massive drop, and then you have 3 years up, and we're waiting for that massive drop, right? So it's all in support of what we're looking at over here, which is going to be a potential rejection on that RSI with the divergence taking place, and then a drop in, of course, the dominant. So there is your weekly time frame, a little bit of a lower time frame to be looking at, and I'm waiting for just one more week. We may get the signal as soon as next week, right? So pay attention to the signal. If we get 3 candles in a row consecutively that are lower and lower, this shows you that it's breaking down the rising wedge formation, rejecting from the resistance and the order block on the left-hand side that initially led to the breakdown the first time in 2021 for Bitcoin dominance. So a break of that, a drop of that brings huge money into the market, and therefore the altcoins should fly. So if you're looking at the ETH-BTC chart, we've covered this a whole lot. It's still busy playing this out. We said the expectation is by January, we should see this really confirming a local bottom or major bottom, not even a local bottom, but a cycle low. And then you should see a big spike up over here, an acceleration out of this. And that's where all the puzzle pieces merge together, and we have the whole altcoin sector beginning to rally, right? So you can see, if you look on Twitter or X, right, the posts about Ethereum have drastically started to increase, now up 282% just over the last 72 hours. And this is typically how it starts, right? First starts very, very slowly, and then it moves very, very quickly, which is where you would see that rapid breakout of the falling wedge formation. So all in all, that's looking good. Another good chart that you can look at over here, and a big shout out to Mustache over here who created this tweet, is simply looking at the total cryptocurrency market cap, excluding the top 10 coins with the dominance. And what you can see over here, this is the others dominance. Essentially, you can see every time it hit this trend line since 2019. So it's a multi-year trend line over here. We get the altcoin season rally, right? So you hit it in 2020, big bounce off of their altcoin season rally. We hit it in 2023. We had the altcoin season rally, a minor one that led into March of last year. And then we came back down. We've retested it once again, and we're starting to leave this trend line, right? As we move up from this trend line, the expectation is leading into 2025, the alt season should take place, right? We can use a little bit more of an objective approach as well by simply looking at what are real people doing with real money on exchanges. Are they leveraged long or not within the market, right? Well, at one point, it started to look a little bit frothy. We can use this color slider to determine how heated was the market in terms of the funding rate, right? What this chart essentially shows us is how much money are people paying in open interest, so borrowing money from exchanges to make bigger and bigger long positions, to open up bigger and bigger long positions. And what you typically want to be looking at is when it's extremely bright orange and yellow over there, it means everybody is taking the long trade. Everybody is using leverage, and everybody is borrowing money from the exchanges. And if you look at Bitcoin in the background there, where it shall pop on and off the screen, that is where you tend to put in your major tops, right? Not only on Bitcoin, but the entire altcoin sector. Well, if you look at the current chart over here on the right-hand side, more specifically at the November time period, you can see it got a little bit heated at one point, but now immediately it's been flushed. And you can even see by looking at the comments right now in the show, there's a lot of people who are super, super bearish still and don't believe that we're going to rally out of these levels. I want to remind you, going back to the key chart over here from Eric Crown, when you have a real breakout, you never come back to those prior levels to backtest them. You consolidate, you pause, and you rapidly expand away from that level with price rallying up very, very, very quickly, right? So the chances of that happening right now is very, very high. What this means is when you look at this chart, it tells you now is probably one of the best times that you're ever going to get to establish those long positions on leverage. Anytime later beyond this point, when it starts to move into this kind of color scheme that we saw in early, last year, December, this year, beginning of February, March, you know that you're too late. It's too late to be putting on leverage long positions. You're going to get absolutely wrecked, right? Which is why I've been building my long positions for quite some time. And if you look on my Bybit account, 6 out of 6 of the trades are heavily up in profit over here. We have Render, which has been part of the AI sector, which is absolutely pumping, up almost $10,000 already on this trade over here. We have Jasmy up. We have Vulcan Forge dabbling in the gaming sector, Prime as well, adding into that position. We have Aptos as a layer one that could potentially at least gain a lot of hype ahead of Solana. We'll see. They talk about flipping Solana in the future. I think it's a bit of a meme, but nevertheless, we'll play the long while the meme plays out. We have Zeus as well as a cross-chain protocol, also up 105% over there. And I've opened these at least long trades on leverage across various different exchanges, simply also to mitigate my risk, right? Why do you want to mitigate your risk across multiple exchanges? It's pretty simple, right? Well, if one exchange goes down or there's a liquidity issue on one exchange, you could lose all of your positions. So I tend to scale these across about 5 or 6 different exchanges. You can see this is the one that we have open over here, of course, on WeX. And if you look at this as well, every position except for one is currently up. And I've taken some of these similar positions as well, right? So if you take a look at this over here, we can see Render also up almost $10,000, similar to the Bybit one. That's 231% over there. So we have a lot of trades, right? Arweave as well, just starting to get cooking over here, 63% up, almost $7,000 in profit on that trade. And I'm busy building these positions. Now, those of you who are in whale room already, you guys know it, you've got into these positions ahead of time, continue to hold them. We riding this wave till the very, very end together, from the bottom of the bear market to the top of this bull market, right? If you want to join into Whale Room, remember, guys, there is currently a Black Friday special. You can see our traders absolutely crushing it. This is 𝗕𝗢𝗕𝗓𝗕𝗓𝗓, one of our coaches over there, getting the Pico bottom, of course, on 𝗕𝗢𝗓𝗕𝗓𝗓, up 27% on a little scalp trade over there. We also have 𝗕𝗓𝗕𝗓𝗓𝗓𝗓 getting Render in the buy zone around that 11-cent zone, already up massively, 50% up on that trade. Huge positions. These are the profits, right? These are some of our members' testimonials of how they've been doing. Very, very, very good profits over here from everybody. Congratulations to one of the most profitable, of course, communities in the world, the wealthiest trading community in the world. Jump in there, guys. Take advantage while you can, right? Now, this is an additional chart and supporting evidence for why I'm continuing to hold my long positions within the market, because when risk returns back into the market, it returns very quick. It's explosive. It happens super quick. And you get to a point in the market cycle where, there's certain times. Let's go back to the seasonal perspective over here. If we look at the seasons, right, there's certain times. Let's zoom in on this particular bull market, right? So if we go into the winter phase, going into winter, transitioning into spring, which is the bottom of the cycle, there's a time and a place to be in the market, and then there's a time and a place to trade the market in and out, and you attempt to time the market, right? The time to be out of the market, of course, is from the top of the market throughout the bear market. You can take small amounts of your capital and attempt to short the market all the way down. And then there's a time to get fully long, which is exactly what we did at the bottom of the market cycle. And then you simply remain in the market until the end. Now, especially when you transition from the purple dot to the blue dot, which is going to be the transition from the spring into the summer phase, is the worst time ever to be chopping in and out of your positions. this is how you get wrecked. This is how you get left behind. And the reason why is because risk returns very quickly into the market, and you can see it from the prior cycles, right? This is exactly what happened. This is a fractal, right? We haven't played this out yet. We're currently trading around that $400 billion mark when you look at the total 3 or the others chart at least. So we're approaching that previous all-time high. Remember, when the breakout is real, like I've said on Bitcoin, at least on the high time frames, when the breakout is real and you start to leave, the train leaves the station, there is no opportunities. When the train leaves, the train leaves. They're not joking. The train is gone, right? And this is what you can expect, is rapid price appreciation. You can see how low that RSI is still as well. It's only just starting to turn up, which suggests a lot of momentum is still there, right? If we look at that same chart on a at least a real trading view platform over here, you can see the inverse cup and handle formation. We've only just started to break that neckline over there, which suggests that very, very quickly you could see price expand 96%. I want to remind you of what happened with Bitcoin, right? If you go back and you have a look at Bitcoin specifically, let's go to the Bitcoin chart over here to show you how fast the risk comes back into the market. So price was chopping about over here. This is essentially similar, right? If you look at the others chart, which denotes the altcoin sector, others is essentially trading within this environment. Look at how quickly Bitcoin went from those lows all the way to reach this high. It took Bitcoin exactly 18 days to move 48%, which means if you missed some of the best days, if you missed even 2 of the days over there, well, you missed out 10% of the move, right? That out of that 40-ish% means you only got 30 more percent, and you're taking on exorbitant more risk. Well, what happens if you miss, the first 7 days? If you miss the first 7 days, you missed 31% of the move, which basically means you missed that entire part of the move. And now you're shuffling, trying to find a new entry point over here. So when you study these charts and you understand the data and you understand what's coming next, now is not really the time to be chopping in and out of your positions. My messaging, at least to the whale room, which we can go into literally as of today, just to be clear, I've remained 100% long in the market despite the possible downside risk and a potential to head down to $85,000. And I explained the same thing to them this morning. You get a certain point in the market cycle where it's just too risky to be out of the market for even 1 or 2 days, right? The reason being is when price does actually go parabolic, the dips are very shallow and very unpredictable. Most people get left behind trying to get too cute, right? And I said, remember, most of the bull market gains happen in just a couple of days. If you're out for 2 days trying to defend against downside risk of potentially 10 or 15%, and the parabolic advancement actually begins, your psychology is going to be broken. You're going to wreck yourself. You're going to wreck your psychology where you left trying to chase price higher, making bad decisions, forcing your hand, being left out. And ultimately, if you miss those 2 or 3 days, you could literally miss the majority of the profits that are going to be on the table, right? So this is at least my belief. This is the way that I'm trading the market. We have a strong breakout over there, consolidation at these levels, and we're looking for expansion. Now, it may chop about for about another week or so, but it's not really the point or the place where I'll be looking for this to drop 30, 40, 50%. Of course, anything can happen in markets. In financial markets are unpredictable, but as per the bear moon that we looked at over here, which is coming up right now, right? Let's quickly go back to that bear moon. As per the bear moon on the daily time frame, if the bulls can just hold sideways and survive for the next 14 days, I think that they're going to be in a much healthier position to absolutely send price higher, right? So let's get into the altcoin sector and some of the actual picks. Well, one of the top picks over here, or at least the top coins that have been running, is, of course, the AI metaverse protocol, that being virtual, right? Virtual protocol over there, huge gains. And we've seen this massive shift into AI agents, right? I'll tell you what AI agents are in just a moment if you're unsure, but I found this to be incredibly interesting. Look at how this is heating up, battle testing these AI agents and really training them. Essentially, this is a training ground for the AI agents, right? Somebody just won $50,000 by convincing an AI agent to send all of its funds to them. So people had to basically, it started off at $400. This is the cost of sending a message to an AI agent. Let's just move that up over there. So it started at $400, and for every message that you send, trying to convince it to send you its honeypot. That message got more and more and more and more expensive. And eventually they cracked the code. The founder keeps 30% of all the profits, and the rest got sent to the person who convinced Fraser, right? Fraser, the AI agent, to send all of the money to that individual, right? So this AI agent narrative is starting to heat up. These are the early signs. If you think you're too late, well, consider this, right? The total market cap of memes in general is $116 billion, and the total market cap of AI agents is only $5.4 billion, right? Very, very small, right? So if it can just capture some of this meme mind share, which we believe this is possibly a meme super cycle, and we said the top picks that we're going to be looking at is between memes and AI, right? So this kind of combines the two together. So I think if you have exposure in your portfolio to memes, to AI, and to AI agents, as well as a couple of layer ones, for example, Solana, which has been one of our top performing picks, I think you will have a really, really healthy, good portfolio. Now, what the hell are AI agents, right? And which are the best ones to buy? I wrote a whole article on this over here. If you go through, the Whale Room wrote this entire article on the top 10 AI agents. If you want to read that, this is entirely free. You can gain access to it by using the link below. Click on this in the description. Scroll through to the bottom over here. What you'll find, it says, sign up for our crypto newsletter, and that is going to be Whale Crypto Trades. Go through to that newsletter. We dropped all the 10 picks in there, top 10 picks for AI agents. I don't want the show to drag on too long, so I'm not going to go into detail for every single one. But if you want to go through that list, everything is over there. Use the link below. It's completely free. By the way, we archive all these articles. So for those of you who have been asking and you're in Whale Room, go through under the announcements section, click on Trade Journal. On the bottom over here, you'll see the spreadsheet, right? When you go through to the spreadsheet, this is where you'll find all of your educational videos, everything that you need to know from, how to fund an exchange, how to enter trade, putting a stop loss, taking multiple TPs, scaling up a trade, as well as all the blog posts, right? Every single one of the blog posts that we've written, which are still valuable because they have longevity. They're not necessarily all super time sensitive. You'll get that in that section of Whale Room, right? Okay, so AI agents, right? You had the AI agents on Solana, and now you have the AI agents on Base. What is Base? Remember, Base Chain is a layer 2, which is built on top of Ethereum. It was built by Coinbase, and we know that they're going to drive a lot of the retail adoption because it's one of the easiest on-ramps into crypto. So it makes sense to look to get some exposure into the AI agents on Base. Part of this has been covered in the article. You can go and have a look at that. But if you look at the AI agent 7-day performance on Solana, which were the first to market, a couple of them are down. AI agents on Base, all of them are up on the 7-day performance just because it's so new. Now, there's a couple of ways that you can get exposure to Base, and we are seeing this mindshare shift, right? What is mindshare? Mindshare is just the attention on various different sectors of the market. We're seeing this shift from Solana now into Base, right? And this is part of what I warned you guys and why I had massive exposure specifically to Brett. I think still this is one of the easiest ways to get exposure to Base Chain because you cannot buy a Base Chain token. There is no token, right? Like Solana as a chain has Solana, and you can simply just buy Solana. You cannot buy Base. They never launched a token. If you're seeing that online, it's a complete scam. Do not buy it. There's only a couple of ways, right? You can buy some of these AI agents. You can buy other meme coins. The biggest meme coin on Base is Brett. And we believe this has got much higher to go. So you've broken above the prior resistance level over here, which is coming in around the 16-cent zone. You're consolidating at this level. And my expectation is that this should rapidly appreciate in price, possibly moving all the way to the 3.618, which would give you around a 253% gain. Now, I know it might feel scary because it's a meme coin, but I actually view this as one of the best risks to reward trades that you can take right now. I think it's very, very safe as an entry, right? So keep your eyes out on Base, right? Looking back to Solana, since there's this mindshare shift between Base and Solana, Solana is almost becoming like the third institutional coin, right? We had Bitcoin, then they opened up ETFs for Ethereum, and now they're already filing and positioning for Solana, and Solana does everything, right? Solana is running the majority of the transactions on the blockchain, everything seems to be built on Solana. You have the NFTs, you have the meme coins, you have everything happening on Solana over there. And it could potentially be one of the best candidates for the stablecoin market, which is a $250 industry, right? If it does happen to come to market, it would, at least as something that comes into crypto as a big use case, Solana could be one of the driving forces to adopt that, right? And if you look at this, Sol's up 46% this month. Retail hasn't been behind the rally at all, right? So you can see this over here by determining, is there too much retail? We did see a lot of retail leading into the prior cycle and towards those peaks. But within this cycle's heavily been driven by at least institutional adoption, right? So this is part of the reason why it's one of my biggest positions, or it is my biggest position, not one of, it's definitely my biggest position. Now, it is a little bit worrisome, which you do get traps in the market in the sense that you did create this new swing low, so you would have actually wanted to see that hold, but instead you came and closed a little bit lower. So I think on Solana, we do need to be careful that it doesn't set in a lower high over there. If it does, watch for the rejection from about 257. If you get that rejection, and Bitcoin actually does go as low as $85,000, then you'd be looking at about $205 for Solana. But I think long term, this is still going to continue to march up. I wrote my whole thesis, everything on why I'm positioning more heavily into Solana. If you want that, it is in the Whale Room Discord, right? Go through and have a look over there. So you can see, if I quickly bring this up as well, let's just bring this coin stats up. This is my portfolio tracker. You can see this is currently the weighting of some of my top picks. I have pretty heavy exposure to Solana in the sense that, a lot of my top meme coins are actually listed on Solana. And I obviously have Solana now at about 51% of my portfolio. If you want to go and watch yesterday's video, I think it was yesterday, basically why I sold all my Bitcoin into Solana, that is on the Crypto Live channel, right? You can see Brett up to 8%. This is the beauty of buying things that have product market fit, have very, very explosive growth opportunity, and buying it at a low market cap or price. You could put in 1 or 2% and suddenly it becomes 8% of your portfolio. And maybe in the future, I'll see Brett at 25 to 35% of my portfolio, assuming I just continue to hold without rebalancing, right? Now, how do you know when to rebalance? Well, you need to control your own pie chart. You can see my equity curve is rising onwards and upwards towards the right-hand side. Everything is looking really good here. This is on CoinStats. I highly, highly recommend that each and every single one of you take advantage of this pretty much once in a lifetime opportunity on CoinStats, where you're getting the Black Friday special. This is a specific deal that I had to fight tooth and nail to get for the Crypto Banter audience. So please take advantage of it. You get a 14-day money-back guarantee. It's where I track all of my coins. It's literally only costing you $2.80 a month. You're spending more than that on a cappuccino or a cool drink at the shop, right, guys? Come on, this is very, very, very cheap. It's 80% discount. That is huge, right? Now, if you don't keep track of your money and you don't know where your positions are, you'll not be able to make professional financial decisions and know when to cut things, right? So you can set goals. You can see I'm 12% of the way to the portfolio goal that I'm looking for, which means I'm still looking for massive upside within this bull run. I'm clearly not bearish at these current levels, at least in the long term. Maybe in the short term, yes, there could be a bit more of a pullback, but long term, we're still looking for huge gains. If you want the rest of this portfolio after the show, I am going to update this as well. I'm going to drop it into Whale Room, into the Discord, because I have made changes, right? So I'm going to update the new one into the Discord over there for any of you that do particularly want that. All right, let's get into some of the altcoin requests, right? What else have we got? What else should we have a look at? We've spoken about AI agents. We've spoken about base and your exposure to Brett. We've spoken about why now is not a good time to be out of the market hoping for lower prices, but rather remain in the market and just take a little bit of the drawdown, because it's going to probably be erased in no time, right? Now let's look at some of the other sectors. Let's look at normal AI. How are those coins doing? We'll go through to Render, which is one of our picks over here. So Render playing out to perfection. Remember, it is one of the trades that we have over here. This is where I initially established this position. If you go to this render trade over here on both Bybit and 𝗕𝗥𝗓𝗓, I particularly took this trade when I saw the equal lows were swept, right? So we're targeting the equal lows over there. You swept the equal lows, created the bear trap scenario. Price rapidly increased and rallied over the range high breakout level. And if the breakout is real, you now expect that you shouldn't come back down, which means that render should continue to climb at least until it reaches around that 1160. If it reaches 1160, holds above there, I'm targeting the fib extensions, which is going to be as high as $20, right? So I think render could be a phenomenal opportunity for 136% gain. Okay, FET has been a little bit more choppy than render, but nevertheless, we established our positions all the way at the range lows at about $1, currently up about 50% on this trade. Very good that it's breaking above the range highs, which is your yellow line over there at 150. Hold above this level, and if you see all the other things come into fruition, like we've looked at, right? Others dominance going up, Bitcoin dominance going down, USDT dominance going down, that should easily drive FET all the way up to 263. Now remember, FET is being rebranded. It was Fetch AI. Now it's Artificial Super Intelligence Alliance. They took a whole bunch of the other top AI projects and they all joined forces, right? So kind of a joint venture between a bunch of other coins over there. This one is looking really, really good. Another one that I've been keeping an eye out on, look at that. The trade's up massively. This was given at one of the Whale School live sessions. If any of you want to join Whale School, there is also a link. We're taking signups right now. We took this trade at a live workshop. We up a lot on this trade already. So from entry, which was down over here, we up 32%. I'm looking for a break now above 689, right? Break and hold above 689, and we should catapult up to about 1,130. So still, how much meat is left on the bone? Well, about an 87% move is still there, right? So looking decent. We are seeing a lot of the memes return. I know that yesterday and the day before was a little bit tough for some of the memes, but personally, I'm still going to be sticking to my guns. I'm still up massively on all of the trades, and you know, volatility is the price that you're going to pay for some of the best performing cryptos in the world, right? You have to be able to stomach that volatility. You need to calculate your risk, right? Position size, understand how much money you can put into a position and still come away a victor, right? Winning, right? Let's continue. Let's have a look at some of the other sectors. One of the other sectors I wanted to keep an eye out on was gaming, right? Because gaming was down quite a lot the other day. So you saw some of the positions that I have is Vulcan Forge. Okay, Vulcan Forge breaking out of the falling wedge formation, you know, consolidating over here. This consolidation probably leads to the next move up to about 526, break and hold above that. And I think this will move to about almost $11. The other one that I had on the table, which I'm still long on, is Prime, right? Ascending triangle, price breaks out over here. Because we established those positions so low over here, I'm willing to hold this even if it means almost round tripping it back down to these lows. I'm fine with that, right? At the end of the day, I still think that this pullback that occurs now is just going to create yet another high low, and you're looking at continuation. So remember, volatility is the price that you pay for these types of insane gains, right? This is what you need to expect. This is not what you get in traditional markets. You do not get these thousands. I think all of these trades are going to run into the thousands of percent profit, by the way. Currently up, 100%, 67, 92, 100, 226. I think that just like we did in March, these are going to go up into the thousands, right? So continue to hold on. Okay, other gaming things that I'm looking at over here. There is an opportunity with Trust Wallet, right? Trust Wallet's not a game. Of course, it's a secured wallet, but they have the TWT token, Trust Wallet token. So there's an opportunity for you, for those of you who have Trust Wallet, or those of you who want to get Trust Wallet. This is how you can get exposure to one of the top games currently out. Just launched yesterday in terms of its token came out yesterday, which means that that's how you can get exposure to it. So step one, you would need to buy or download the Trust Wallet, right? The app on your phone. Step number two, you would need to buy the TWT token. Step number three, you would need to stake that TWT token on the Trust Wallet app, right? If you look at the token, it's pretty stable. It's got a high market cap. So if we go back to the market cap over here, how long do you stake it for? 7 days, right? You stake it for 7 days. And you can see the market cap currently $450 million. So it's not going to rug you, I don't think, at least. It's holding up over here. So probably if you stake it for 7 days, you'll have the same money or more, but that qualifies you for the airdrop, essentially, right? What is the airdrop? It's on World of Dystopians. This is the price that just released yesterday, also holding very, very stable. So essentially, they're going to release that. It's 1% of their supply, 10 million of the tokens to the TWT stakers, right? So you stake Trust Wallet token on the Trust Wallet app, and every 8 hours from the point at which you stake is where they'll start to unlock and airdrop this token to you, right? World of Dystopians, they have 1 million daily active users, right? So it's not a Mickey Mouse game. It's a pretty serious game. If you want it, there it is, right? Good opportunity for you guys. The other thing that I'm looking at, we spoke about this yesterday as well, is a Myth, right? The Myth token, right? Because Myth recently partnered with FIFA World Cup to create the FIFA Rivals game. So there it is, the FIFA Rivals game. You can see I think that it's going to be huge because it's the FIFA World Cup next year, leading into the peak of the bull market. So another opportunity, which is kind of underlooked right now, is going to be the Mythos token. If you look at the trade setup, I'd be looking at something like this. Stop out at 24 cents if it goes below there. Pretty much start scaling into longs over here. You can target TP1 up to 42 cents, TP2 at 55 cents. If we get a breakout in the next coming weeks and you're trading up at this level, chances are you can just convert this into a swing trade and continue to hold it, right? So there's the Mythos token. It hasn't been through a full cycle. It only just came out. Also holding pretty stable, market cap at 242 million, which means also very unlikely to rug at that kind of a market cap. So a lot of opportunities out there in the space. And again, I think the biggest opportunity is this though, guys. This is your financial future. We have 1 year potentially left for this bull market. You're getting a 42% savings. Jump into Whale Room. Go, feel free, read all the comments. Go look on 𝗲𝗏, read all the various reviews and see for yourself if it's something that you want to join into. I almost want to go as far as saying, if you don't like it after a month, I'll refund you. But I'm not sure if I'm allowed to say that yet. I'll have to double check. So that's it from me, folks. I'll see you all on the next one. I hope you have an absolutely lovely day, and we'll catch you later. Cheers for now.